Good morning. Today, our group will be talking about shadow banking and the development of China's financial sector. I will start off by giving some background on the structure and history of China's banking system and then transition towards the diverse economic conditions that promoted the growth of China's shadow banking sector. So, China's four largest banks, known as the Big Four, are also the world's largest banks in terms of asset size and are China's state-owned banks. They have about 3 trillion AUM each. Here, they are ranked in asset size. It should be noted that there are also two additional smaller state-owned banks, the China Merchant Bank and the Ping An Bank. So the state-owned bank system in China typically works the following way. Depositors give banks their money and receive relatively low interest rates. These banks take that money and give cheap loans to state-owned companies, which typically spend that money on infrastructure projects. China makes a guaranteed profit because these rates are fixed. So China's central bank is called the People's Bank of China. It operates similar to the U.S.'s Federal Reserve in that it is responsible for setting interest rates, regulating financial markets, issuing renminbi, regulating interbank lending, managing foreign exchange markets, and recording foreign currency transactions. Anyway, now we'll be talking about the global financial crisis of 2008 and its effects on the shadow banking industry. So it's China's shadow banks, which are non-bank financial institutions that provide similar services to that of commercial banks but are free from regulatory scrutiny, have existed since the late 1990s, yet began drastically increasing as a result of the 2008 financial crisis. So the global financial crisis took a significant toll on China's exports and foreign exchange reserves. During this time, their GDP fell around 4%. In order to combat this, China engaged in a 384 billion renminbi stimulus package lasting from 2008 to 2009. This was geared towards public infrastructure, social welfare, and rural development. The stimulus spending eventually led to a 25-month high of inflation for the renminbi, about 4.4%. China combated this inflation with a subsequent wave of contractionary policy from 2010 to 2013. This was centered around increasing interest rates to about 4.2%. These policies led to a significant decrease of commercial bank loans and deposits. So eventually, this decline in commercial bank loans and deposits opened the market up for shadow banks. Since shadow banks do not comply with government regulations, they were able to give money to many more people and operate much more freely during this period, where other banks faced significant regulation. They were also able to charge whatever interest rates they wanted and invest in whatever they wanted. Obviously, this made shadow banks much more compelling for people, as demonstrated by the following graph. So on this graph, you can see from 2009 to 2010, during the worst period for China during the financial crisis, the money supply of shadow banks actually grows as China's M2 money supply subsequently falls. So another reason for the growth of China's shadow banking sector is the long period in which their commercial banks did not offer deposit insurance. So shadow banks operate free from regulatory scrutiny, yet as a trade-off are not able to benefit from federal protection in the case of a bank run. In China, this protection comes from the Financial Stability Bureau of the People's Bank of China, which operates similar to the US's FDIC and offers a 500,000 renminbi deposit insurance payout to China's commercial banks in the case of a bank run. That's about 70,000 USD. Nevertheless, the FSB PBC was only established in 2015, around 15 years about 20 years after the gradual opening of China's private financial sector. Therefore, China's non-banking financial institutions have had an extensive period during which their main financial disadvantage over commercial banks was the fact that they did not have preference in the chance of a government bailout. It's therefore inevitable that this period helped incubate China's shadow banking institutions and helped create the $10 trillion industry we see today. So, if you look at 2015, quarter 2, 3, and 4 on the subsequent graph, 2, 3, and 4, you can see how the FSB PBC helped shrink the sheer influence of shadow banks. This is their assets and decreasing during that period. Anyway, now let's dive deeper into the logistics behind shadow banks.